All right. Good morning, everyone. Get in the comments. Let me know if the audio sounds good, everything looks good, all that good stuff. All okay? All right. Thank you. Good morning, Duke. Good morning, Alex. Good morning, Russell. All right. So right away, it's dropped down to the hourly time frame. So I was acknowledging that this wasn't a convincing run. This right here, kind of slowly just grinded lower. Came down one more time, immediately came back up and closed. This wasn't too convincing of a nice run lower to look for lower pricing down here. And especially now the fact that we just shifted into new highs on the hourly. Not too sure if I'm going to be able to catch anything with any deal of high probability here today. So nothing in here except for if you could have traded this in the London session. This is a high probability entry. Everything else in here, not a high probability entry. And obviously I don't trade London, so yeah. Now, in terms of price action, I would have preferred if we just swept these clean highs up here that I was talking about in yesterday's private stream, and then like had some type of SMT, like maybe NASDAQ took out the high, but they're all just expanding higher off this 9:30 opening. So let's look at NASDAQ. Let's go to the 5-minute. So we consolidated. At, so let me go back quick. And let me actually delete some of these boxes because we don't need them. So looking at this hourly imbalance inversely, you can see prior to the 9:30 opening, they consolidated at the high end of it, and then they expanded out of that consolidation. Now that we got that expansion, I want to see if we can form some type of reversal. And if we can't, I'm more than likely not going to be taking any entries. So yeah, that is the narrative I have here today. And then yes, obviously we are in very close proximity to this July high that we made. So this will be the yearly high. So I'll just put a line up here. Now I will admit it. I was not expecting this yearly high to be swept this quickly at all. But here we are. Actually, no. Alright. So we are trading to this volume imbalance right here, but if we're using IPTA data ranges, this is past 60 days, so I don't use any daily time frame arrays past 60 days, so I'm not going to use it. But anyways, as I was saying, price moves in specific ways. So whenever we see an expansion following a consolidation, you want to see, do we have a retracement and then a continuation, or do we have a reversal? We'll wait and see. And also there's 10 a.m. news, red folder news coming in here, so obviously I'm going to be waiting until 10 a.m. Thanksgiving tomorrow, yeah. Tomorrow will be my 21st birthday. How exciting. I get to smoke and drink cigarettes now. Or, I just said that backwards. I get to smoke cigarettes and drink now. Let's go. And I'm joking. Yeah, no. Go ahead and run up that like button for me, please. Because if we do find something clean in price action, I will be absolutely outlining it to you real time. And taking the trade in front of you real time. I will, from time to time, spectate some other streamers. Obviously, there's a few. I wouldn't even say a few. There's only one streamer that I like other than myself. And I'll see like other streamers. They'll be like, all right, I'm in right here. I'm in. Did you guys take that? All right, I just got covered right here. I just took my profit right there. But they won't show you their account balance, and they won't show you any executions at all until after the fact. And who knows how many losses they took behind the scenes before they showed you that one win. So, yeah, don't get conned, guys. Don't get conned. All right, let's take a look at Dow on the daily time frame. So Dow did just trade into this rejection block. It does look like we'll have a nice clean sweep on this September high. And then I'm going to go to the 4 hour actually. So we are just delivered this 4 hour imbalance. Okay. So nice delivery to the buy side on Dow. So we just have very inefficient price action down here. We have a liquidity void and a very large previous regular trading hour gap down here. So two very inefficient points of price action below sell side liquidity, and price is just not having it. And yeah, keep in mind we do have what do we call it nowadays? Thanksgiving tomorrow. So it's a bank holiday. There might be some weird things taking place here today, so we'll have to wait and see. And at this point, no, I'm not interested in getting long. Number one, we have a large regular trading hour gap left behind. Number two, I'm just, yeah, it's not a part of my model to get long in deep premiums. It's just not. So, yeah, I wait for my model to come to me, and if it doesn't present itself, then I don't take a trade. And that's how you become profitable, doing those type of things. Happy to have you too, buttery bubbles. Okay. Yeah, happy to have you too. Baba says these past 2 weeks haven't been very high probability. You're right to an extent, especially yesterday. Yesterday, especially the PM session was very. So pre-market, it actually was pretty nice yesterday. So let's go to NASDAQ. So this nice sell-off model here, targeting New York session sell side down here that we were targeting real time in my private stream yesterday. But other than that, after the 9:30 opening, low probability. PM session, very low probability. Actually, Monday was actually very clean. We were able to annotate everything real time. Longs to the upside, and then we caught a nice short scalp down to the imbalance here as well. So Monday was actually very clean. Tuesday, not so much. Today, we'll have to wait and see. And once again, I'm waiting until 10 a.m. So this rundown, this isn't convincing to me to look for any sells because all we're doing is we're tracing down into the 5-minute gap. So I need to see like maybe some type of failure swing at the wick here or something like that. Other than that, not too interested. So 5-minute gap being repriced too. Dow looking ugly as usual. Whoa. What was that tool? I don't think I ever used that before. Don't know why anyone would ever need that, but I want to see how we act with this 5-minute gap. Obviously, we used it inversely in the short term, but that's not a high probability sale on my hands. We still have 9 more minutes to the 10 a.m. news. So yeah, once again, we're just waiting here. There's nothing high probability to enter on yet. We'll wait for that 10 a.m. news. Ideally, for lower pricing, I want to see this entire gap overlapped, which we got that, but I want to see it move on past it and then some type of retracement. Anything other than that? No. So I want to see maybe if we can move on past this 5-minute gap completely, and then also disrespect these down close candles. That's very important, and then see some type of retracement back into that. So we'll have to wait and see if that presents itself. So buy side liquidity swept. The Monday's high swept. We just created a high here, wicking off aggressively. It's more than likely that this wick is going to want to be worked back in because it's wicks are seen as gaps. But yeah, 7 more minutes till 10 a.m. And then look at ES, same thing. We swept previous 2 days highs, completely wicking off. And then we have sell side liquidity stacked up below here. We have new week opening gap down here. And then we have this gap down here for NASDAQ. And this right here, this is just an old volume imbalance from the daily time frame. That's the only reason why I have it on my chart here. So basically, I'm keeping this level extended because I want to see if we can use this inversely going into 10 a.m. So I'm going to keep this on my chart. It's this hourly gap down over here. And then for ES, that gap I don't really have to use, so but I will go ahead and mark it out just to be able to reference on the lower time frames, that's all. But yeah, once again, relax. Don't try to rushing and get short now that we just had a nice collapse here after sweeping the buy side. Just relax. If a high probability entry presents itself, it'll come. It's not going to just shoot completely down right before the 10 a.m. news. So just calm down. Alright, so there's that. We just disrespected the down close candles, what I wanted to see, as well as overlapping this entire gap. So that's good. And look how we use this 5-minute gap inversely. This, you know, this looks beautiful in hindsight, but this is not a high probability entry in my eyes. Maybe it is for, you know, someone else and they made money. That's cool. That's not my model though, so. Look at every single move and ask yourself, would I want to risk my personal live funds straight out of my bank account right on this trade right here? And if the answer is no, why are you taking the trade? Even if it's on demo. And obviously we don't demo trade over here, but if you're still learning, you definitely should be demo trading. Alright, so we have 3 things here. We have 2 gaps disrespected. We have this order block, these 2 down close candles disrespected, and then we just shifted below the swing low. So 3 things here. Now we want to see if we can get a nice retracement back into the range to be able to get short. Alright, so obviously I'm not going to be shorting this 1-minute gap right here. If you're doing that, you're just impatient and impulsive. So, at least from this swing high right here, I need to see at least a retracement back into equilibrium here of the initial price swing. So just watching to see if we can get up into this area here. 1 minute until that 10 a.m. news release. So ideally an ideal short would be right up here in the premium of the range. Alright, so here's 10 a.m. 10 a.m. news drop. And yes, we did deliver, if it loads, we did deliver about half of the regular trading hour gap, but I want to see us overlap that. I don't want to see us find support here and then trade higher. I want to see us overlap this regular trading hour gap. So we'll just watch and wait here. If we don't get that retracement up into here and we just go lower, I'll just simply wait for the next shift in market structure and try to get back in. But it's ideal for us to get a retracement up in here, but if you look at it, we have this buy side of the curve and then completely overlaps that range. So this should act as a balanced price range. So if it leaves that now, we can expect it to not reprice back to here and then just continue lower. And what would I be targeting? The London low here and the lows down here. There's really nothing else you can target right now. And then let me get this off my chart just because it's kind of a distraction. So let me outline this 15-minute gap for you. I want to see us drop down into here. Looks like we're getting ready to do that already. So yeah, it's unfortunate, but obviously I wanted to see us dip up into here to get short. And we didn't get that, so I didn't short, right? Simple enough. But whenever I stream for all my private members, we all see real time. Not every single time, 80 to 90% of the time, we have a nice expansion move down at the optimal time of day, and then we form a short-term high. 80 to 90% of the time, that short-term high is going to get swept. Why? Because everyone's going to want to get short here in the first correction higher after the expansion down, and then immediately they're going to have naturally there's going to be a lot of buy stops resting above this short-term high here. Now, I say 80 to 90% because there are exceptions. So, like, if it wants to keep this as a balanced price range and not return to it, it won't do so. And it'll keep that short-term high intact. This high right here. So, at this point, with how it's moving down, I would have to see if I can get some type of 5-minute entry rather than a 1 minute. Alright, so we just broke down into the 1 minute gap. Let me go ahead and outline that as well. I know it's a lot of lines and boxes going on, but I need to reference them in the lower time frames. So we do have sell side liquidity stacked up below these 3 lows here. So Dow has yet to shift below the swing low here. Dow's not having it. So why did I not get short here? Number one, overlapped range should act as a balanced price range. Number two, we didn't get up into a premium of what? High, low. We just missed that equilibrium. Number three, let's look at the hourly time frame. We have this large wick left behind, and there's always a chance that can come up and get worked in at least. With this market scenario here, you know, a lot of times I would say midpoint, but at this point I would want to see if we do go up there, 25% of the wick being respected and going lower. Typically, if we're going to be aggressively trading lower with a great deal of high probability, it'll respect the 25% immediately. So it's probably hard to see, but I just measured that out, the 25% out. And we very can't even get my words out. We may not even work up into this wick period. We might just keep going lower. We'll have to wait and see. So 25% of the wick would be within this 5-minute gap and above the short-term high. So watching and waiting. See how we're kind of stalling here? Bebe says, why are we favoring Nas these days? I don't favor any market with the averages. Oh, actually, obviously, I'll never trade the Dow. But if we're talking about ES and NAS, I never prefer one over the other. I only trade the one that has the better current market structure. And it just so happened that NASDAQ has been having better market structure recently than ES, so that's why I've been trading NASDAQ more. Go ahead and right up that like button. We need at least 20 likes. Come on. So in my opinion, if you're shorting this 4566, 4557, I would just take my profit right here and just take your 9 handles, and that's that. But for right now, I just want to see if we want to get to these premium rates first and have a little short-term sweep on buy side, or do we get another expansion like lower, another retracement, then I can take that second retracement. But until it shows me something real, I will just sit here and wait. So yeah, all I needed to do was open here and just wick up into here real quick, and that would have been a high probability short. But obviously it didn't give that to us. We're hovering right above this 15-minute gap too. Keep that in mind. Right here. Sorry, it was an hourly gap, not a 15-minute. Right here. But yeah, even if we don't get that retracement I'm looking for here up into this area, if you look at the bigger picture here, so we use Sunday opening to the high. The whole way up until down here, we can still get entries in a premium. I just need to wait and see what it wants to do first. So if you're ever fearing of missing out on a move, just simply take the weekly range. So you could use the low right here. You can use low to high, but typically I use the Sunday opening to the high and use that as my range here. Alright, so NASDAQ is trading into this inverse 15-minute gap over here. Yes, I'm still referring to that. And then we just delivered this hourly gap high. I know it's a lot of lines, guys. I just poked through it very, very slowly. Do I ever look at the Russell? No, I don't. I only look at ES, Dow, NASDAQ, and the dollar index. And that reminds me, I actually do need to look at the dollar index quick. So the dollar, I was looking earlier, obviously, the dollar index is bullish. In my live stream, I called, you guys can, anyone that's in my inner circle here, they can call me out my bullshit and tell me I'm lying. But real time, I was calling out, I wanted to see these two highs swept yesterday. So we kind of came down, matched it, and then we came up beautifully. So we wanted to see these swept, and then longer term, I want to see us come up and clear out these relative equal highs. So yeah, I'm still bullish on dollar. I think dollar does warrant some type of retracement here, though. But yeah, we'll wait and see. Alright, there's one of two things that could take place here now. We can have this immediate rebalance and then continue lower, have another shift in market structure, and get in there, or we'll get that retracement we're looking for. Two scenarios. But it's definitely preferred to get a short-term sweep on buy side, though, because there's going to be a lot of guys with their buy stops resting up here, and whenever they're seeing this slow moving here, they're seeing this slow consolidation, they're probably sweating right now. How did I see where the Sunday opening is on the 5-minute? Well, I already have it marked out. No, I wasn't even on the 5-minute. I was on the 15. But yeah, I have it marked out already. This line. So yeah, just be patient, relax. There's nothing personally I would have pushed with my live funds yet, so if you look at the data, you look at the statistics from collective traders, especially in the prop firms, those who have lower frequency of trades typically are more profitable. So ES also just delivered the hourly gap high right there. And I want to see if that can push us up into at least the inefficiency here. I'm not going to short that. Absolutely not. But I want to see if we can offer some short-term retracement here. Are we back up? Everything up and running? Let me know, guys. We back? Alright, cool. Goddamn YouTube loves to do this. Already underlooked as a trader as it is, and they're over here. You know, the algo doesn't want me spewing out this very knowledgeable information. So what do? They take down my stream. Alright, I appreciate you guys. Thank you. Good morning, Mo. Didn't even know you were here. Thanks, FC, Alex, Duke. Appreciate you guys. Super Toaster. Thank you. So yeah, obviously, as I've been saying, I'm not, we're going to have patience here. We're not going to just get in just to get in for fuck's sake. Like, we're taking trades that I would want to take with my live funds. So we're respecting this inefficiency so far. If we get another aggressive, keyword aggressive, shift in market structure, then I can maybe look to get short in that premium. Other than that, nope. See how slow it's moving? Alright, so these short-term sell sides was just tagged here. And so far Dow and ES are failing to do the same, so we'll see if that remains true. Alright, there's ES making that low. Remember what I said, I need an aggressive shift, not, just trade down a little bit, come back up. I need to see something aggressive. Let's see if Dow followed. Just about. So yeah, see what I mean? Needed something aggressive, and what did we do? We came down, swept the low, and then immediately traded right back up. That's not significant to me at all. Whoa, what is going on here? There we go. Just so new viewers can come in and know what this line is. So yeah, absolutely, I'm not shorting that. I said what I needed to see, and that didn't play out. So what's gonna happen? Gonna continue to sit on the sidelines, right? We're not sitting here gambling, hoping, oh, please work out in my favor. Please trade lower. As soon as I get short. No, we're waiting for a specific model. Very specific things we're looking for. Very specific elements, algorithmic principles, all that. No gambling taking place here. Alright guys, go ahead and run up that like button for me. We have 37 viewers, but have yet to reach 30 likes, so I'd appreciate that. Just simply because it helps me to reach and help more people. That's all. So we came down, swept this short-term low, and we're now coming up completely overlapping this gap. Same with NASDAQ. Dow failing to take out that low. So at this point, I think it's more likely we will trade up into this premium arrays that I'm seeking. Alright, so we just shifted above this high now. Now watch this 1 minute gap inversely. So yeah, these buy stops are coming more high probability to be swept. Everyone that chased this move lower and didn't take their profit, they're sweating right now. They are sweating. Matter of fact, their palms are dripping. Alright guys, one more. One more to 30. Come on, we got 40 viewers. So yeah, I'm anticipating the buy stops to be swept here, this gap to be traded into here, and then the 25% of this wick to be traded to. And this was all said real time. I was saying this as this short-term high was being formed in the first place. I'm not just saying it now that we're already trading up to it. So there'll probably be other live streamers like, oh yeah, all right, yeah, there's buy stops up here, we're gonna sweep that now that it's already aggressively trading towards it. That's not what we're doing here. We're already anticipating this way before any of this even takes place. And how am I able to do this? Well, because I've been sitting in front of the charts for 4 years now, and I have experience. And experience is one of the #1 teachers in trading, right? So if you see anyone else streaming or doing whatever else, and they like start acting surprised when they start seeing something, unless it's like something crazy, bomb drops, something around the world crazy happens, unless it's that, and you see them getting like, damn, what the hell? Where did that come from? How did that happen? Yeah, they don't have enough experience and they don't know what they're doing. I'm sorry. That's just the truth. So honestly, if we do retrace down in here, I will get long targeting these specific price points I want to see. But other than that, I'm just gonna let it go up to there. So if we get a small little short-term retracement down here, I will just throw in one contract long. But otherwise, I'll just let it go up to my targets. And let me extend this over here a little bit just so everyone can see it. So see how close we're getting to the short-term high, and they're wicking off a little bit. So it'd be really nice to see them actually match the short-term high and then retrace down in the short term and then come back up and sweep it. That would be very nice, but as it stands now, it looks like it's just going to come up and have a clean sweep. Alright, so see what it's doing? Trading down a little bit, giving those who have their buy stops right up here a little bit of hope. And then they'll slam right through it, crushing their hope. So yeah, I'll only get long up into my targets here if we get if we got that short-term retracement. We didn't get it. So but yeah, very clean SMT divergence here. Dow failed to take out this low here. And Dow actually already swept that short-term high, so see what it's doing? Consolidating a little bit. Those who have their buy stops up here, they're having a little bit of hope. They're like, all right, maybe they'll find some resistance up here and then trade lower. I'm good. Now, looking back in hindsight, this will look like nothing, and this will look like, you know, yeah, it'll just look like nothing. But real time, while you're actually sitting through it real time with live funds, it definitely does a number on someone's psyche. Alright, so need to see it tap down there one more time. Oh, I thought I pressed the button. There we go. Alright, so I'll just get long right here, and I'll target simply the 25% of the wick here. And then buy stop, or sell stop, sorry, has to be below the order block here. And then I'm also trading this 1 minute gap inversely. So the intended long was this gap right here, but I just got filled just above it. But I mean, that's obviously okay. So yeah, this is for me, this is a scalper's market. With trading, you have to be able to identify when you should be scalping and when you should be holding on longer for longer trades, such as 20 to 30 handles and whatnot. Where it stands right now, this is absolutely a scalper's market, and obviously you see I'm just going for 6 handles here, nothing crazy. So let's wait for it to play out. See how they generated more buy side at the highs here. So yeah, once again, nothing crazy here. Just going for 6 handles, targeting. Let me see if I can extend this over. I don't think I can. But yeah, you guys saw ahead of time it was this hourly. And I don't even know, now that I'm looking at it, I wrote consequent encroachment, but really I should have wrote 25%. I don't know why I wrote midpoint, so that's my fault. So obviously the ideal entry was at the low end of this imbalance, but got filled right within this volume imbalance right here. So that's fine. So yeah, there's that. So notice I was saying they're, all right, come on, poke through there. All right, there we go. There's that buy side delivered beautifully. And notice I was calling this out before any of this price action was even a thing. All right, so NASDAQ still has to poke up there, so. It's a good day to be watching GK the Trader stream, isn't it? You were going to be impulsive and try to get short real quick, weren't you? So this is 25% of the wick. That's what I'm targeting. And boom. I'm out. 6 handles. Nothing crazy, but, you know, nonetheless, it's profits. So that's 6 handles right there. Everything called real time. This is what makes profitable trading. Whenever you see guys doing huge run-ups in equity and, you know, using all these fucking contracts, going for insane gains in one day, they're not profitable. I'm telling you, they're not. Obviously, people can get, you know, go on some good gambling streaks. I'm not saying that's not possible, but in the long term, they're going to lose their ass every single time. Real profitable trading comes with the boring shit like this, just taking 6 handles for one contract, waiting, watching, being patient. So the more boring it is, the more profitable you will be. So yeah, good day to be watching the stream here, right? And notice it stopped dead real time. Obviously, you can go on past it here, but notice the exact precision on the 25% of the wick here. And it trades off as soon as it touches that. So you can see the precision real time, even if it goes past it. So quick recap of this week. So I live streamed Tuesday, called everything out real time Monday in my private Discord for Inner Circle members, obviously. We caught $650 on the NASDAQ with a nice scalping short. Tuesday, I took a loss. I took 3 losses on the NASDAQ on my live stream. And, alright, so hold on. Just give me a second. I took 3 losses, but only lost $180 managing risk effectively and closing them out whenever I saw certain closures above premium raise. So $180 lost there. That brings me to about 540. Or sorry, my math isn't mathing. 520. And then I took a short scalp. I posted it on Twitter. I honestly forget how much that was. It was like, oh, it's 350. So you guys can do the math on that. And then here we are today. And I think this is going to be my last execution of the week. Obviously, there's no trading going on tomorrow. But yeah, tomorrow will be my birthday. 21. Very grateful that I started young. But anyways, let me stop talking about shit that doesn't matter. So look, this wick right here, I said real time. Not every single time. 80 to 90% of the time. Rewind it. I'm saying it again in hindsight as I said it real time, ahead of time. Most of the time, whenever we have a large wick being left behind right here, it's going to at least want to retrace a little bit up into it. And at least prefer to see some type of resistance being found at 25%. But midpoint is permissible. But yeah. So yeah, anyways, you guys, I already said my logic multiple times on the short or long here, sorry. Wick 25%. Short-term buy sides resting above here from those chasing price. We weren't, if you're watching my stream, you weren't doing that, so you didn't fall victim to this. And then we came down into what? This hourly imbalance. This is what this pink shaded area is. And then we had one more short-term sweep on buy side, and we immediately closed up above this low. So when I saw that, I needed to see the shift above this high. And when I saw that, I saw us come back down to this gap with the inverse gap. Boom, get long. Get out, get right out at your targets. Simple logic there, guys. Oh, I appreciate you guys. Thank you. All right, now be honest. Be honest. If I took a loss here, would you guys still be telling me happy birthday? No, but I appreciate you guys though, nonetheless. But yeah, now obviously I'm gonna stay in here and tape read because I want to see what we do now that we've reached these levels I wanted to see. So let's look at ES or NASDAQ, sorry. So we just reached equilibrium. Now what we don't want to see, so if we're going to be expecting lower pricing, what we don't want to see is the high end of this gap being, so, alright. Basically just watch this 5-minute gap inversely. We do not want to see this traded above, and we don't even want the high end of it traded above. If that happens, then I'll probably cut loose on my idea of shorts and start looking at this high up here. And then one more thing I'm going to do with this inverse 5-minute gap is we are at the midpoint. So watch the midpoint. I want to see how we act around that as well. And yes, I still have to draw these lines here. So I can reference them in the lower time frames. I can't just not have them on my chart. I know it's a lot once you go to the 15, but alright, so look, one more thing I wanted to add to my long is I saw that we also swept these internal sell side liquidity for those trying to get up with this up move from pre-market. And then we traded into, so let's take the London low to the New York high that we made, and you see that we traded into a relative deep discount at the 62%. optimal trade entry. So I saw that, and if we found some support there, it would be obvious that we're going to be retracing up into here. I almost went short. All right, so Commandment says I almost went short at 10:27 1 minute chart. Let's see. You almost went short right here? Well, it's good you didn't, and you just look at this and you learn from it and be like, yeah, that's not what I'm supposed to be doing. And then you move forward and you don't do it, and boom, all of a sudden you're profitable. You have to accept failure in this game because it's going to come. You're going to fail. You're going to fall flat on your face. You're going to lose. You're going to take loss after loss. And one day it'll click. Only if you push through the failure and you're accepting to it. Like, you lose your ego. You're like, okay, obviously what I'm doing is not working. I need to change this. So it's okay. It's okay to fail and make mistakes, but what really decides if you're going to prosper or get through that is if you learn from it and you stop repeating this. Like, how many times you're going to repeat the same mistake? I know people that have been repeat the same mistake for almost 5 years and they never learn from it because their ego won't allow them to grow. And yeah, it's unfortunate, but it's reality. But anyway, I outlined everything real time. Quick scalp. More than enough on a day like this, but I'm going to continue the tape read to see what we do now that we reached consequent encroachment of this inverse gap here, the 5 minute. So yeah, I like how we just traded below midpoint of the inverse gap, because if we want lower pricing, you do not want to see it come up to midpoint of an inverse gap and then treat it as support and trade higher, because if that happens, then immediately my eyes are going to jump to this high right here. Yes sir, Colt. GG. Buttery says, yeah, has happened to me a lot, blown 400 accounts. I'm not going to let that happen again. Yeah, like I said, it's a part of the process. You should be happy that you blew those 400 accounts, because that's a beautiful learning experience. And once you reach the success, it's going to feel a whole lot better than if you just got to success right away. And you're going to appreciate your profits a whole lot more. But yeah, I wish you the best. Duke says, that's me, but it's not ego driven. It's more of an internal dysregulation. Yeah, I hear you on that. Yeah, Bronson, everything was explained real time. So yeah, just rewind the video. And honestly, I did drop a lot of good gems in here. So anyone that's willing to sit here and listen to what I'm saying and take note and whatnot, yeah, I mean, you'll learn a lot. It just depends on if you have an ego or not, because a lot of people will have an ego watching me and they'll be like, oh, listen to this fucking guy. He got one lucky win. Thinks he's the shit now. Why the fuck would I listen to him? He's like 20 years old. I know that's what some people are thinking in here watching me, and I don't really care, because I'm here to whoever's watching me, I'm literally live streaming to help you. Like, I don't even have to do any of this here. I can just trade and make my own money. Like, literally the only reason why I'm streaming is to help people not be impulsive and help them find high probability entries like this. But yeah, that's enough talking on that. So let's see. NASDAQ. Yeah, once again, we just dipped into a premium. Right here. Failed in this imbalance. And look, the reason why I'm saying I don't want to see it go above the midpoint is because we have the buy side of the curve here, sell side of the curve. So this should act as a balanced price range. So once it trades into the low end, it should have immediate feedback telling us it wants to go lower. It should not come up to the high end of a balanced price range if we're bearish. So that's the rundown on that. So I'm not going to mark out the inverse gap on NASDAQ. I'm just going to show you the midpoint. So far we failed to get to the midpoint of that. So that's good. And then now we want to see, do we overlap this 5-minute gap or not? And guys, keep in mind, if this was a different market condition and we weren't like exceedingly bullish on the higher time frame, daily time frame towards the yearly high, on a different day, say 4 months ago, I would have just went short right here. Stop goes above this candle, go short, and target lower. No, I'm not doing that in this market. Absolutely not. But anyways, the narrative is here is we failed to get to midpoint of the balanced price range. Good. Now I need to see it disrespect this inverse gap. Or not inverse gap. Disrespect this 5-minute gap. A little short-term run on these highs would be permissible only if we trade up to it and then trade off instantly. Just because they are a little clean there. Same with ES. Looks a little too clean. So we're just kind of consolidating. Notice we're consolidating at that midpoint. You're 30. Buttery says, bro, I'm 30 and I don't care you're 20. You obviously put in the time. Yeah, funny how that works, Jose, right? I was primarily looking to see if we can get some type of bearish New York session, and I ended up taking a long. How's that? That's called, I don't want to keep saying the same thing, but it really is just experience and having a good narrative and willing to switch your bias and not marrying one side. That's all it is. 63 and you're listening? Makes me happy to hear, actually. Glad you're here, Michael. Alright, so apparently 63 years old is a baby. Okay. Well, what does that make a 21-year-old? Alright, so yeah, nothing really to commentate on here, honestly. Past this long. I do want to stay in here, though. So, look at this 5-minute gap. If we're going to be seeing lower pricing, I need to see this aggressively expanded right through. If it respects it, gets above the midpoint of this inverse gap here, supports that and trades higher, I'll be looking at the high. If we completely overlap this 5-minute gap right here with aggression, keyword, aggression, I'll be looking at a continuation lower, obviously. Hell yeah, I got the old school game here. Honestly, I love it. I do. I love it. And honestly, it makes more sense that I would have older people, primarily older people in here, because, like, I guess you can say my streams are more boring than, I guess, I don't know, maybe other streams, because, I don't know, they're trying to entertain, but I'm not trying to entertain you here. I'm just trying to make everyone money and outline things. That's all. And yes, Duke is correct. We still have the remaining portion of the regular trading hour gap residing below the lows here. But once again, we just have to wait and see if we get an aggressive expansion through the 5-minute gap, and more specifically this 1-minute order block right here. So honestly, now that I'm looking at it, before we even expanded through the buy side in the wick I was seeing here, so look, see how we open on this 1-minute candle right here and trade right down to the opening of this order block? I could have added one more contract there. So this, all right, so look, let's take the opening here. What's the opening on this candle? Look at the middle top of the screen. 4565.50. That's the opening. What's the low of this candle here? 4565.50. That is perfect precision from an order block to buy side. Now, I was covering this in my private live stream yesterday. What is the purpose? Why does it even matter? Why does it even matter that we trade down order blocks? What's the purpose? Other guys that don't know what they're talking about, they'll be like, oh yeah, we're trading down this order block. That looks good. All right, I'm going to long there. All right, well, why do you think it's going to go higher off that order block? Whenever price opens, so we have this down close candle here, and then we completely shift above that, change in the state of delivery. Price will remember this specific price point, the opening, and whatever high it makes. If it had a little wick, it'll remember that too. And it'll trade down there to accumulate longs. I mean, literally, listen to the name. It's called an order block. It's coming down to accumulate orders. What orders? Buy orders. Into what? What does it want to seek off the order block? Buy side, inefficiency, and this wick here, this green line. Very simple. And what I just gave to everyone right now publicly, there's people charging hundreds and hundreds of dollars just to tell you that. So all right, so let's see. Digging into this gap here, but once again, I need to see aggressive expansion through it. I don't want to see it just trade to it and then come up a little bit and then no. I want to see aggressive expansion off of the low end of this 5-minute low right here. But yeah, to me this looks like too shallow of a run, and then these highs look a little too clean up here, so I'm not too sure right now. On the contrary, we are entering the 1050 to 1110 macro, so let's see if that does do anything. And also monitor how we're trading in this small little 1-minute gap within the 5-minute gap. And now, the only time I use, in quote, support and resistance with highs and lows is whenever we have a gap coupled with it. So this 1-minute gap, and then look over to the left, we have this high right here. So I would be looking at that as a quote unquote support level at the high here with the imbalance. Jose says, one question, GK. Did you learn trading with ICT 2022 mentorship, or were you a private student? Well, actually, ICT 2022 mentorship was one of the last things that I watched. I became a student right as it became 2019. That's exactly when I got into trading. Had no clue what the fuck I was doing. Obviously, I just started. But yeah, 2019 was when I started. I was watching. Admittedly, all of ICT's private paid mentorship was getting leaked and whatnot on this Mega File app. And yeah, I was just watching it all there. So technically I was a private student, but not really. But yeah, that's where I started. Alright, so we got that aggressive expansion through the 5-minute gap now. That's what I wanted to see, right? Now what? We just traded right through this order block, right through it. That's exactly what, two things I wanted to see. So immediately my eyes are going to the lows here. Immediately. The lows. And the remaining portion of the regular trading hour gap down here. So that's that. And we respected the midpoint of the balanced price range. So 3 things I wanted to see. And now we can reasonably target lower pricing. Duke says, I saw a guy that interviewed him on TopStat that had the biggest withdrawal on the platform so far and has a Discord and just lockdown server. Advertising to pay him $1,500. If you're referring to the guy that I saw as well, now naturally some people are gonna be like, "Oh, he's just hating on him." Yeah, whatever. I mean, it's pretty obvious the guy's a gambler and not a real trader. I mean, why else would he be trying to charge $1,500 for a Discord? Because he knows it's never gonna happen again. It does, believe it or not, guys, it does happen. People get lucky, it happens, but you know, luck is a low sustainable fuel that doesn't last long. So, but literally, I saw the interview. He was using like 15 contracts, and yeah, I mean, if you're using 15 contracts and you're profitable, I mean, obviously it's just a lucky gamble, and you made yourself some money. So fuck it, right? I'm not doing that though. So no, this down close candle, this is not, I'm not looking at this as a breaker. I am looking at it as a change in institutional order flow though. So we traded below that down close candle. Now institutional order flow is shifting bearish. So what we're going to do is extend out this inverse gap right here. And we want this respected. And ideally I want to see us tap up into this imbalance here. And honestly, guys, I don't really care about taking any more entries today at this point. I'm content with I'm content with the $350 I just made, or $300 I just made, sorry. Yeah, we're doing live funds here. It's not like I'm trading demo, so. Alright, so watch this imbalance here. And you can watch this order block inversely, but it is not a breaker. So watch and wait if it trades up into this small gap here. This first gap was delivered on NASDAQ. Ideally, though, you want to see this gap traded into. So yeah, we saw everything we wanted to see for down movement. Now we're just watching this 1 minute gap inversely. And then obviously, here, let me get my executions off. Obviously, these two down close candles an order block, but we're not looking at that as any type of support. We want it to be traded through quickly. But yeah, guys, this type of stuff, outlining setups, scalps. Obviously, today was just a scalping type of day so far. Logic is always giving out real time. I do this every single day. Everything called beforehand in my inner circle, which obviously you can join here on YouTube. It doesn't make a difference to me, but the only reason why it's a small charge. The only reason why I'm even charging in the first place is because if someone's willing to pay just a small charge monthly, that shows me they're at least somewhat serious about trading, and I only want people who are serious about trading in my inner circle. I don't want, people that are just there to spectate. How do you know when it's institutional order flow entry, Gerald? Well, typically I anticipate those using inverse gaps like this. So like, for example, I want to see it pump up into the very low end of this gap here and respect the high end of this gap here. So that would be considered an institutional order flow entry drill. And then I'd want to see it trade off aggressively. So I'm going to go to the dollar index. So we got that warranted retracement finally that I was talking about earlier. And then we're in a premium of the range. But longer term, I told you guys I want to see this buy side liquidity pool being swept. Very high probability of liquidity pool. Number one, there's inefficiencies above it. Number two, if we take our daily range, it sits right. What's right above it? Equilibrium. Very high probability drawing liquidity up here. I want to see that swept. And then we also just overlapped these two daily imbalances. So yeah, I'm still bullish on dollar, but we could get a retracement though. Okay, another thing I'm just now seeing also is watch this 5 minute gap. We want to see that reprice too. And then the high end of the inverse gap right here respected. So if we wouldn't get a retracement up to here, honestly, I wouldn't be shorting it. Because if you short down here, you just have to open your risk up even more unnecessarily. And yeah, there's no need to do that when you can just wait. So I'm going to take some of these lines off here. Alright, so I'll put a black line here delineating the 5 minute gap. So now watch how we act. And if it trades above the inverse 1 minute gap, then I wouldn't really advise you to show interest in shorting. And then also I'm looking at this hour. Remember this hourly gap I told you guys about? You want to see it show immediate respect at the high end of that within the 5-minute gap. Now, if it gets to the high end of the gap right here, boom, interest is gone. So look, we're already trading too high for me to see this as a good entry. So see how we're just see the logic given real time. It traded right above this inverse gap and traded to the very high end. So that's not. Yeah, I wouldn't be entering that. That's all. So if you are shorting, which I would not be, your stop loss would have to go right above here. So on the 5-minute, your stop loss would be, so let's say you got short 4565. Your stop loss would be above this candle's high right here. This 5-minute candle's high. So I like how we're wicking off in the 5-minute gap on the 5-minute. But I don't like how high we traded. I wanted to see it come up in here, institutional order flow, and then aggressively trade off. I didn't want it to trade to the high end and disrespect the high end of this 1-minute gap here. So, and then we just ever so slightly dipped into the inefficiency right here. So it is 11:05. Typically, this is the time where price isn't as clean. So, I don't know. I think I'm considering staying until the lunch macro because I think the lunch macro may do something. Just because how we've kind of been in a range here, so you can see why I only went for 6 handles here. In my opinion, this long right here, if you're feeling more aggressive, you could have got long at this down close candle here. But longing up into these targets that I outlined real time was the only high probable trade you could have taken this morning, in my opinion. Now, you could look at this in hindsight and be like, well, this is a nice scalp right here. Well, no, it wasn't, because you would be trading the very lowest gap here right at the 10 o'clock news release. So you very easily could have got slipped to the upside as soon as that news release dropped. So yeah, nothing much to commentate on here. So we just closed at the upper end of this 5-minute gap. I don't want to see that. So I think we might be seeing higher pricing here rather than lower. So we traded to a discount. Traded down to these down close candles here. Traded to the lowest inefficiency right here. And we respected this 1-minute gap inversely. And now we're getting above it and respecting it here. So why would you want to short that when you're seeing all those conflicting factors? So yeah, if you guys gained some insights from the stream today, and maybe you caught this 6-point scalp with me, I don't know. Go ahead and hit the like button so I can reach more people and help more people as I did today. But yeah, I am going to continue to tape read a little bit, though. I'm not going to end it yet. So the only thing that would change my mind about us going higher now is obviously if we disrespect this 1 minute gap. If we do that, you can use that inversely and have a more high probability short rather than just shorting up here. Jared says, or Miles says, looks like we have the same name. Mine's spelled with a Y, though. Thanks for sticking around. Yeah, no problem. Jared says, appreciate you, bro, for real. Streams help a lot. Well, I'm appreciative that you find value in them. So, glad to have you here. So, yeah, nothing really happening right here. I think I don't really want to end the stream, guys, but this price action is kind of tempting me to. So for lower pricing, I want to see the low end of this 5 minute gap traded below and then treat it as resistance. Other than that, I wouldn't be putting live funds at risk right up here because it very well could just trade higher. So see how it's continuing higher. So at this point, now that we're consolidating at the low end of this inverse gap here, within the 5 minute gap, I'd be looking at going into new highs here. So you guys can clearly see how I was, I guess you could say, looking for shorts. But with narrative, you don't take the short. And we actually ended up taking a high probability scalp to the upside instead. Alright guys, so I'll wait like 10 more minutes. Honestly, just want to see what we do here, so. Alright, so basically the 5, yeah, I'll just keep it there. I don't need to mark it out. But anyways, as I was saying, typically 11 a.m. and lunch hour is the least high probable time periods to be trading. So, not to say I haven't caught good trades in those time periods, because I absolutely have very good trades, but typically. So you can see how the logic is framed out real time and not in hindsight. So I wanted to see us come up and respect this inverse high end and then immediately wick off for lower pricing. What did we do? We got above it and it consolidated at the high end of it and now expanding out of that. So my eyes are immediately jumping up into these clean highs right here. And then same with same with NQ. See how we came down into this gap here? So yeah, and then look, Dow already came the way up to the new high. So yeah, I want to see this high swept right here. Notice where we consolidated at. Or just around midpoint. That's not random. Just around midpoint of the 5-minute gap inversely. So anyone that impulsively shorted this, once again, for the second time, literally the second time, anyone impulsively shorting is regretting it right now. Unless they listen to me, they're happy. So watch to see if we don't get a drop down into this volume imbalance and see if that propels us to a new high. And then also watch, obviously, the imbalance right there. Oh, oops. Yeah, I don't need it anyway. That was not a tired yawn. I'm not tired. Accidentally closed your short? Well, I guess that's good, right? I'm out. Buttery says, I'm out. Thanks for the stream, brother. I'll be joining your premium. I made my money prior to your stream and don't want to give anything back. Have a good Thanksgiving and happy birthday. I appreciate you. Thanks for tuning in, too. So, yeah, have a good rest of your day. So yeah, I think that'll do it here, guys. Nothing really. Obviously, I'm expecting us to go up into these clean highs here, but I just don't like what I'm seeing. So like, if you look at NASDAQ, see how we're displacing below this gap right here. So yeah, just kind of consolidating. Oh, whoops. My bad. Alright, so yeah, but look, ES following NASDAQ there. And then Dow already swept the highs. Alright, so watch these clean highs here. And I do like how he closed relative to this volume imbalance here. Obviously, I'm not going to chase and get long now, but Yeah, see, look, see, price is just playing around right now, and it's 11:17 a.m. Not an optimal time of day. So, if I am gonna peek back, at around 1:20 a.m. or a.m. 1:30 p.m. I'll be back 1:30 p.m. If I see anything clean, immediately I'm gonna boot up a live stream for my private inner circle members, and I'll see you guys then. If not, hope you guys have a great Thanksgiving. And yeah, that'll do it for the stream here. Thanks for tuning in.